Good morning and welcome to the ADS Securities Markets Update. The US dollar managed to rise yesterday during the first trading day of the week, despite the fact that yesterday's fundamentals came in shockingly weaker, leading the US equities also to close higher as September's rate hike probabilities has declined back below 50% again. However, the US dollar rally is seen as a short-term short-term rally and unlikely to continue, as we noted in our previous report yesterday. And the downside outlook remains as long as the index continues to trade below the 97.13 or 97.40, which basically stands around this area here, which represents the broken downtrend line support. This is also as long as the US 10-year yield remains below 2.2%. Looking at yesterday's fundamentals, the Empire State Manufacturing Index unexpectedly declined sharply and declining by the most since 2009, declining toward or to minus 14.92 in August, down from 3.86 in July, despite the fact that estimates were to rise toward 4.5%. And the entire components for this index basically declined sharply, except the 6-month future outlook, while the employment component declined by the most since December of 2013, which puts the manufacturing jobs in focus in the next US jobs report. During the Asian session, the RBA monetary policy meeting minutes came in with somewhat less dovish tone, leading the Aussie to rise almost across the board during the session. The bank introduced a new info on the economy and the financial conditions, which basically will guide their new outlook. And the bank also noted that the info will determine if the current policy is appropriate. However, the bank also noted that the economic activity is generally more positive over the recent month, and most importantly, the bank also said that the downside risks from or to the Chinese growth has receded again, or receded somewhat. Therefore, the general meeting minutes is somewhat encouraging for the time being, given the fact that there is no hints for a rate cut anytime soon. And in addition to that, right now, all eyes will be on the next meeting or the next meeting minutes, as the new information on the economy and the financial conditions could be released by then. As for the European session ahead, there is no economic releases from the Eurozone or from the Euro countries, while we'll be waiting for the inflation data from the UK, which is likely to have a notable impact on the market, especially if it comes in with some surprises. The CPI is expected to remain at 0% given the fact of the continuous decline in oil prices. Therefore, it is unsurprising if or if the CPI or the month-over-month CPI came in is slightly weaker, or at least coming with a surprise decline of minus 0.1 to minus 0.2% because of the decline in oil prices. In addition to that, the year-over-year Core CPI will be the key for today, and the estimates are to remain stable at 0.8%. However, any uptick will be translated as an inflation pressure, which should increase the hopes for a sooner rate hike by the Bank of England in the early 2016, and therefore the British pound may finally break out from the recent time range. Going forward to the US session, we will be waiting for two economic releases throughout the day or throughout the session. First, the building permits are set to decline back by 8.2% in July after rising by 7% in June. However, the housing starts also may rise by 0.5% in July after rising sharply by 9.8% in June. Going forward to some technicals today, and today we will look at two charts only. The British pound, first of all, beginning with the British pound, which basically failed to break out in the early morning hours yesterday, trying to break out from the recent tight rate retracement since mid of July, reaching as high 56.88 before declining back toward 55.70s in the early morning hours today. However, the tight range also continues as seen on the chart since mid-July with no clear breakout. Our bullish outlook also remains as long as the pair continues to trade above 1.5550s and 55.25, which basically also represents the 50 and the 61.8% Fibonacci retracement for the past few days. The euro also eased back again, reaching as low as 1070s in early morning hours also today, and this is, however, the bullish outlook remains basically as long as it stays above 1.10 for the time being. Moreover, a deeper technical retracement could be seen toward 1031 before the uptrend resume, which is basically also another short-term technical retracement. This is it for today. You can follow us on our social media sites, Twitter, Facebook and YouTube, to get the latest economic releases, reports and analysis. Thank you for watching. I'll see you once again tomorrow. Have a good day.